Okay, welcome to Stock Talk with Nico Criticos. Today we're going to be doing a comparison of the most popular EV stocks. And so let's get started. First up, we have Ford. Now, this is a traditional legacy automaker, but recently, in the past year or two, they've gotten more invested into making electric vehicles. This is a market cap of $77 billion. Their price to sales is very cheap at 0.6, along with a Ford PE of 10, also very cheap. And they are expected to do 14% revenue growth, which is very good for a company trading at such a low valuation. Then we have their most popular EV is their Ford Mustang Mach-E GT. And this is $43,000 and has a range of 270 miles. The next one is General Motors. They have a market cap of $90 billion, a price to sales of 0.7 with 18% revenue growth expected for 2022. Also very cheap with good growth, a Ford PE of 9. And their most popular is the Chevy Bolt, which starts at $31,000 and has a range of 259 miles. Next up, we have Lucid. This is a company that has not had any revenue yet, but the market cap is $91 billion. They do have 17,000 sedans reserved for next year. They're expected to start production in 2022. And those sedans will equate to $1.3 billion of revenue, which is a good sign, but that is not enough to justify a $91 billion valuation. Now, the Lucid Air starts at $77,000 with 520 miles of range. So what sets them apart from their competitors is their range. They have a lot more range than the other competitors do, but you're paying $77,000. So it's more expensive, but you have more range. Then we have Rivian. This is a company that just went IPO a couple of weeks ago, and their market cap is $114 billion. They also have $0 of revenue so far. And Ford just dropped their partnership. I messed this up. It's supposed to say Ford dropped partnership with Rivian, as well as Amazon invested $21 billion into Rivian. As of this past week, it came out that they have a shorter battery range than was expected. It was expected to have 315 miles of range, and now they're questioning if it can get up to that number. Their cars start at $70,000, also more expensive than a lot of the other ones. And with a smaller range, it doesn't seem like the best deal. So this is another one that doesn't make much sense because the market cap is over $100 billion, but they have $0 of revenue. Then we have NIO. This is a famous Chinese EV maker. They have a market cap of $61 billion. And this makes a little bit more sense because in the last 12 months, they've done $3.6 billion of revenue. That's in United States currency. And they have a price to sales of 12 with expected revenue of 71%. That's also a very cheap valuation if they're growing revenue 71% next year. But keep in mind, Chinese companies normally do trade cheaper because they are riskier a little bit, and the investor base does not trust Chinese companies as much as American companies. So that's why Chinese companies will trade at a discount. Now, the range for NIO's cars is around 247 miles. So not very high, but I mean, they have fantastic sales over in China. So things are looking pretty good for them. Next up, we have Tesla. This is the world's biggest EV maker. They are they're known for their electric vehicles. They've done almost 10 years of production now, and their CEO is Elon Musk. They have roughly $5 billion worth, or not $5 billion, 5 billion miles worth of data has now been collected over the last 5 or 10 years. And their Model 3 Performance Edition has 334 miles of range and starts at $47,000. Their Model S is $89,000 and has 375 miles of range. Now, Tesla is important. Tesla is special because they are profitable and they have proven what they can do with $46 billion of revenue done in the past 12 months. So I think ever since Tesla really had its big spike, and as you can see here, I invested in Tesla when it was $54 a share back in 2018. So my returns are over 2,000% now. And so I am kind of biased towards this because I've been very successful with my Tesla position, but I'm going to try to be as fair as I can. But it's hard to be fair because Tesla has so many more competitive advantages. And I think all these other companies like NIO, Rivian, Lucid, they're all getting a bunch of hype put into them, because I think people are expecting these companies to also 10x and 20x, and that's not exactly how it works. Just because it worked really successfully for Tesla does not mean it's going to work for these other companies. And so that doesn't mean that they make bad products or they don't have a good chance at becoming a dominant player, but it does mean they have a lot to prove, and they're years and years behind Tesla. And that goes for GM and Ford as well. They're years and years behind. How I said before, Tesla has been producing cars since 2012, 2013. And everyone associates Tesla with electric vehicles. When you think of Ford, you don't think of electric vehicles. You think of the F-150 or something. With Tesla, you think of Model 3, Model X, Model Y. And so it looks like Tesla's main problem over the past couple of years has been that they don't have a affordable enough car. And so that's fair. And they still have time to come out with that. I mean, if you look at these other competitors, some of these other ones are over $70,000. So it's not like these are super cheap cars either. But the main thing you have to realize is that, so Tesla is at a $1 trillion valuation now. Okay. And I'm not saying that's completely justified either, but that's also factoring in years and years of growth. Like, they really have to sell millions of cars a year down the road, and they need to execute on their self-driving feature. So Tesla has lots to prove too, to get to that $1 trillion market cap valuation. But for these other ones, so Ford and GM, you're not really taking much of a risk because those are kind of proven business models with proven customer bases, and they're safer, low valuation. But for NIO's in the middle, and then Rivian and Lucid, those are extremely risky investments right now because they have so much to prove. They're pre-revenue, so we don't even know what type of problems they're going to have. In 2017, 18, and 19, Tesla, as they were ramping up their Model 3 and their Model X production, they had so many problems with burning through cash flow. They had factories start on fire. They had a bunch of backlash from the media. So there's lots of things that you have to go through in order to get to this position that Tesla's at, where they're going to do, a million units of sales this year. So that's the only problem, is these Rivian and Lucid companies, they cannot be trading at 90 billion, $100 billion valuations. And so I think if I was going to buy into these, I wouldn't even think about it unless they were at like maybe a 10 billion or 20, maybe $20 billion valuation. So these are just way too overvalued, and they do have some potential, but they have a lot to prove. GM and Ford, they're probably gonna stick around, especially Ford's been looking pretty good this year so far. So those are all fine there. Now here we have, from the first 6 months of this year, 2021, we could see that Tesla did 420,000 units in sales. And then these other competitors in second and third place, these are Chinese companies. So those don't really apply to, North America, but we have Volkswagen, we have BMW and Mercedes coming up there. But it's just, Tesla they have the majority of the market share, and they have the technology and the engineers and everything you need to be the number one player in EVs. So here we can see market share of Tesla vehicles by region. This is not in the EV market. This is in the entire vehicle market. In the United States and Canada, they're approaching 2% now. They probably are at 2%. So, because this is Q2 of 2021, but that's why I've been bullish on Tesla from the beginning, from 2018, because it was just, they proved more than these other companies have. And so that's why it made a little bit more sense to invest in that company. And so that is all for today. These are the reasons why I am bullish on Tesla. I think Ford and GM are fair. I don't think they're going to have any problems. And then I think NIO should operate just fine in China, but I don't see them doing much outside of China. And then Rivian and Lucid, I think it's too early on to invest in. I want to say they're too overvalued right now to invest in, but they do have some potential down the road. So we'll see what happens there. But yes, that is all for today. We will see what happens with the future of electric vehicles.